Today, I want to slow everything down and talk to you like a serious investor, not like a hype channel. Many of you watching have been holding Iraqi Dinar for years. Some of you bought it after hearing about secret revaluations. Some of you bought because friends told you Iraq is rich in oil and the currency must rise. Whatever your reason, you deserve clear facts. The Iraqi dinar is connected to a real economy that is rebuilding step by step. It is not a lottery ticket and it is not a guaranteed win. Let us start with the biggest claim you hear online. People say major hedge funds and banks are secretly buying Iraqi dinar. There is no public proof for this. Large institutions report their holdings. There are filings, disclosures, and research papers. None of them show big positions in IQD currency. Institutions do invest in Iraqi oil projects, construction deals, or government bonds. That is normal for frontier markets. But currency hoarding claims are rumors. When you hear them, ask for proof. If there is none, move on. Now let us look at Iraq's real situation. Iraq has been rebuilding since the early 2000s. The country still depends heavily on oil. Around 80% of government revenue comes from oil exports. When oil prices rise, Iraq earns more and builds reserves. When oil prices fall, Iraq faces budget pressure. This dependence makes the currency sensitive to global energy markets. Iraq's foreign exchange reserves have been reported in the range of roughly 90 to 110 billion in recent years. These reserves are managed by the Central Bank of Iraq. Strong reserves help a country defend its currency and control inflation. This is a positive sign, but reserves alone do not create huge currency appreciation. Many countries have strong reserves and stable currencies without massive revaluation. The central bank has been working on banking reforms. Anti-money laundering rules have been tightened. Dollar auctions have been monitored more closely. Banks are being pushed to meet international transfer standards and use digital payment systems. These steps are not exciting news, but they matter. Investors care about transparency, stability, and trust. Without a clean banking system, foreign investment does not come. Inflation in Iraq has stayed around the mid-single digits in recent years. GDP growth moves with oil prices. Some years growth looks strong, some years it slows. The non-oil economy is still developing. Agriculture, construction, and services need time to grow. This is normal for a country rebuilding infrastructure after decades of conflict and sanctions. Now we must address the biggest myth in the dinar community: overnight revaluation. Many videos promise a sudden jump to $1 or more. This is not realistic. Iraq has a very large money supply. If the dinar suddenly rose to $1, Iraq's exports would become too expensive. Government salaries could not be paid. Inflation would explode. No responsible central bank would take that risk. Currency appreciation happens slowly as productivity grows and the economy diversifies. Look at other countries. Vietnam and Indonesia improved their currencies gradually after reforms. It took years of export growth, trade agreements, and banking reform. The same logic applies to Iraq. Real growth is slow. It is steady when done right. So what real factors could strengthen the dinar over time? First, banking reform. Iraqi banks must build trust with global banks. Second, economic diversification. Iraq must grow agriculture, manufacturing, transport, and technology sectors. So oil is not the only income source. Third, political stability. Investors need predictable policies and security. Fourth, trade integration. Iraq has talked about joining the World Trade Organization, but membership takes years and requires deep reforms. Fifth, cooperation with global financial institutions like the International Monetary Fund and the World Bank. These groups push for transparency and sustainable budgets. Now, let us bring this back to you. As an investor, you must treat Iraqi dinar as a high-risk frontier investment. That means discipline. Do not put your entire savings into DNR. Keep it a small part of your portfolio. Think long-term. 5 to 10 years is realistic for meaningful change. Ignore fake rate dates. Watch real indicators like reserves, oil output, inflation, and banking reforms. You also need an exit plan. Many investors never plan when to sell. They wait for impossible numbers. If your investment gains 20 or 30% over time, think seriously about taking profit. Greed destroys more investors than bad news. Another truth you must accept is that Iraq still faces real challenges. Political tensions, corruption issues, regional conflicts, and infrastructure gaps slow progress. Oil dependence creates risk. Global oil demand changes with technology and climate policy. If oil demand falls, Iraq's revenue falls. This affects the dinar. At the same time, Iraq has real strengths: large oil reserves, a young population, a central location between Asia and Europe, and rebuilding opportunities in housing, transport, and agriculture. These factors create long-term potential. But potential is not profit. Work and reform turn potential into results. Many dinar investors bought because they heard stories of instant wealth. That mindset must change. Think like an institutional investor. Study data, follow official reports, be patient, protect your capital first. Before we continue, I want you to ask yourself one question. Why did you buy dinar? Was it research or hope? Honest answers help you plan better. When you answer that question honestly, your strategy becomes clearer. If you bought dinar only because someone promised an overnight revaluation, you are investing with emotion, not logic. That is dangerous. Real investors look at numbers. They track budgets, reserves, trade balances, and inflation trends. They do not follow rumors on social media. Let us talk about real signals you should watch every month. Iraq's federal budget is one of the biggest indicators. If the government controls spending and invests in infrastructure that supports non-oil sectors, growth becomes sustainable. If spending rises only on salaries and subsidies, long-term growth slows. Oil production is another key factor. Iraq produces millions of barrels per day and exports most of it. When global oil prices rise, Iraq earns more dollars. Those dollars support reserves and stabilize the currency. But if prices fall sharply, the government must borrow or cut spending. That pressure weakens confidence in the currency. Foreign reserves are also important. Strong reserves help defend the exchange rate, but reserves must be supported by real economic growth. If reserves fall quickly, investors worry. So follow reserve updates from official central bank reports. Banking reform progress matters too. When Iraqi banks connect better with international banks, trade becomes easier. Businesses can import equipment and export goods with fewer barriers. This creates jobs and income over time that supports currency strength. Infrastructure projects are another sign. Roads, railways, ports, and power plants improve productivity. Projects like transport corridors or housing developments create jobs and raise domestic demand. But projects must be completed, not just announced. Always check progress, not promises. Now let us talk about risk management. Many dinar investors make one big mistake. They tie their entire financial future to one asset. Do not do that. Keep your savings diversified, hold stable assets, some growth assets, and only a small portion in speculative plays like dinar. This protects your family from shocks. Set clear goals. Decide in advance what profit level is enough for you. Maybe you plan to sell part of your dinar if the rate improves gradually over several years. Maybe you keep a small portion longer, but write your plan down. Without a plan, emotion takes over. Another lesson is patience. Frontier markets move slowly. Bureaucracy, politics, and infrastructure challenges delay progress. Many investors quit too early or chase rumors. Stay calm. Watch real indicators. Adjust when facts change. You must also learn to separate national pride stories from financial reality. Iraq has rich history and huge oil reserves. That does not automatically make the currency strong. Currency strength comes from productivity, exports, stable governance, and investor confidence. Ask yourself this: if you owned a factory in Iraq, would you feel safe investing millions today? If the answer is not fully yes, then global investors feel the same. When Iraq improves security, law enforcement, and business laws, investment will grow. Then the currency can strengthen slowly. One more truth: even if Iraq's economy improves, the dinar may not rise dramatically against the dollar. Many countries keep weaker currencies to support exports. A stable dinar can still mean economic success. Do not assume a strong economy always means a huge exchange rate change. Now, I want to speak directly to you as a content creator, audience member. Do not reward channels that promise dates and secret rates. Reward channels that show data and explain risks. When viewers demand facts, the whole community becomes smarter. If you hold dinar today, review your situation. Check how much of your savings are in dinar. Check how long you are willing to hold. Check your exit plan. If you cannot answer these clearly, you are gambling, not investing. I am not telling you to buy or sell. I am telling you to think. Study Iraq's real progress, watch official data, be patient, protect your capital. Iraq may grow steadily in the next decade, Banking reforms may continue, infrastructure may expand, oil revenue may fund development. If that happens, the dinar can strengthen gradually. That is the realistic path. But there will be setbacks. Politics may delay reforms. Oil prices may fall. Regional tensions may rise. Prepare for both good and bad outcomes. Before I end, I want to ask you something important. If you value honest, fact-based updates, tell me. Share how many years you have held dinar and what your exit plan is. Your answer will help others think seriously instead of chasing rumors. Smart investing is boring. It takes time. It needs discipline. It rewards patience. That is the real story behind the Iraqi dinar.